So silver still has a lot of catching up to do. And that's a good thing in my view. If silver was really catching up with gold, that would be another signal that this bull run is coming to its end. Even the two biggest and best uranium miners in the world have struggled to ramp up production as originally intended. I think the important thing to really remember about that is a one-way door. That doesn't go back to the way it was before. China and Russia certainly don't decide, oh, we're okay with trusting, the SWIFT system in New York and the United States government to have a kill switch on our financial lifeblood. I mean, I do think that was a paradigm shift, doesn't go back. And people say, well, how much gold can central banks buy? My answer is, well, how much money can they print?
Okay, ladies and gentlemen, so today we have Lobo Tiggre back on the show. And today we will look at the US economy, the commodity sector, precious metals, and many other very interesting topics. So Lobo, thank you so much for being here.
Glad to be back on the show.
Thank you so much, Lobo. So very busy times for the precious metals analyst and lots of happening in the economy as well. So I would like to begin with the macro picture on the US. What's your take on the US economy and what would be some of the things that you're paying attention to right now?
Well, the macro view is really US and global economy, and it hasn't really changed that much since the last time we spoke. We did get a reminder this last Friday that Trump shock is not done. This has been one of my theses, one of my key points, really, for some time. Is after April 2nd, so-called Liberation Day, everybody got all upset, and then the taco trade set in. People decided that Trump's bite was not as bad as his bark. He always chickens out and so on. And it's understandable because he says these outlandish, part of his art of his deal, his negotiation tactics is to make, these grand statements and huge demands and then compromise on something that's less extreme. But that compromise, it's like you need $20. So you ask for $100 and the people say, what? No. And they say, okay, I'll take 50. And they say, oh, okay, 50 is better. But you got more than the $20 you needed, right? And this seems to be the way that Trump goes about making his deals. So April 2nd was the $100. And now, we have tariffs that are, some of them are even larger than April 2nd. And we've got super tariffs and retaliatory tariffs and tariffs if you buy oil from Russia, or now, threatened 100% new tariffs on China. So I digress. The point is that everybody who in the mainstream has been saying, oh, the worst of Trump shock is behind us. I think that's just wrong. It's not over yet. He's still working on his agenda, still using the sledgehammer approach. But even besides that, it's one thing is Trump's style and the deals he's trying to make and change the world, not just the US economy. The global economy gets rewritten if he's successful. It's the reality as the changes percolate in, like to the degree that companies are coming back to build auto plants in the US or rechanging their supply routes. This is a big deal. And it's not a transition that can be done painlessly. And this is, again, the global context. Even if it's painless for US auto workers, if one of the big automakers makes a new plant in the US, it's painful for the auto workers in Canada or somewhere else. And what goes around comes around. So the takeaway of this is, if I'm right, that there's still a lot more, let's call it adjustment, to come from Trump shock, which I compare to Nixon shock. He is trying to change the global economic order and reboot the United States as a manufacturing powerhouse, not just a capital powerhouse or an intellectual powerhouse, but a 21st century manufacturing powerhouse. That has global implications. It is, I believe, inflationary. And I also believe that it's, even without the AI and electrification booms, it would require a lot of commodities. There's a physical property, plant, and equipment investment to be done to achieve what Trump has set out to do. And whether he succeeds or not, or whether somebody comes in the next election and changes everything or not, he's got 3 more years plus. And inflationary commodities demand plus the AI and electric booms, it's really looking very good for all things real, including real estate, real money, and real commodities.
Yes, certainly. And Lobo, if we look at the recent economic data with all the unemployment, the revisions, are we seeing slowdown in the US economy?
The data that we have, right? um, I think there's little question. There's where there is question is people say, oh, well, the unemployment rate is still at historic lows. It's only 4.3%. Well, that's 0.8% higher than it was when this started. So that is a significant increase. There's also the question of, what does the unemployment rate even mean when immigration goes into reverse and the population base changes? Jim Bianco does a good job of describing this. So, if the population isn't growing, how many new jobs do you need to have, apparent stability? And for a while that may seem to hold, but it also masks the weakness. You may say, oh, well, we just didn't need that many jobs. It's a bit like sour grapes. Oh, well, we didn't need those jobs anyway. Well, that didn't change the fact that those jobs are not being created. And the fact that those jobs are not being created does not tell me that we have this great, strong, greatest economy ever. So, the ADP private payrolls number going negative and the previous, so-so number also turning negative in a revision, that's a really big deal. And not just because the BLS number didn't come out. I mean, that by itself, those private payrolls, I rather trust ADP more than the BLS anyway. So there's no doubt. You look at the trend in the JOLTS data, even the BLS numbers, there's no doubt that there's been a weakening trend in the hard data, not just the soft data. The hard data has been trending down. And the consolation of, oh, well, but the unemployment rate is near historic lows. A, that's been going up. And B, it's not near historic lows. The U3 number that we look at and we call the unemployment rate, that's not the same number that we had 50 years ago when you say it's the lowest it's been in 50 years. The pre-fiddling number that we had those decades ago is closer to what we now call the U6 rate, which is closer to 8%. So it's just not true that we have this historic low in unemployment. We have had, we had a low and still are near a low of the, post-fiddling numbers, which are designed to minimize the actual unemployment scenario. So answer to the question is yes, I see plenty of weakness in the United States. Well, why hasn't this caused more trouble? Why hasn't the US gone into recession or the unemployment rate gone up further than it has? I do think that Lynn Alden has the answer there in terms of fiscal dominance. Don't forget the money helicopters is my vulgar wolf way of putting it. The trillions and trillions that have been printed and that we're spending, the deficit spending that we have now, despite the greatest economy ever, we have wartime levels of deficit spending in the United States. Those two things don't square. And they tell me that the economy is, at root by its nature right now, much weaker than it seems. But all that money going into it has an effect. And we see that in the statistics and why it seems like it's not as bad as it is.
Yes, and so Lobo, let's move to the fun stuff: precious metals, gold, and silver. So gold is at around 4,000, even 4,100. If we look at the fundamental reasons that brought gold here, I suppose they're still here. But at 4,000 level, I would love to hear your view on how are you viewing this market right now?
Yeah, this gets rotten eggs thrown at me. I've been the professional rain on the parade for most of my career. It's not actually my intention to be negative. It's my intention to be realistic. And so when everybody's jumping on the hype train, it's going to the moon, it's going to the moon. Well, somebody trying to be reasonable in that context seems like a real Debbie Downer. I wonder who Debbie was and how she became famous for being such a downer. Anyway, so as per your first two questions, yeah, the fundamentals are extremely bullish. That's why I said anything real, including real money. The fundamentals haven't changed. if anything, the case for gold and silver, by the way, to your silver bulls, just gets stronger, it seems, almost on a daily basis. That having been said, my way of framing this is, there's a couple, but one is, 15 years ago, 20 years ago, when gold was starting to pick itself up off the floor and head north, and we asked ourselves, well, gee, if all the money printing comes home to roost, we might see $1,000 gold. Or hey, if it was $4,000 or $5,000, there'd be riots in the street, there'd be wars around the world, there'd be chaos and policy change, and nobody would know what was going on. And well, that kind of looks like what's going on these days. So, if we get mad at the Fed or the ECB or anybody else, the powers that be, for moving the goalposts, then we gold bugs shouldn't be moving the goalposts ourselves. And of course, somebody's going to say, "Oh, I said 10,000, not 5,000." But come on, gold has gone parabolic. There are crazy things in the world, so it's not unreasonable to ask, is this it? Is this the target that we had? Have we met that? What does that mean? Another way of looking at it, Vladislav, is the great bull market of the 1970s, famously had this huge 50% correction in the middle. And so people want to say, oh, well, this bull market started in 2020. Well, that's kind of cherry picking. Come on. If you say, well, it started in 2015, well, that's picking what looks like an interim low. If you look at the 1970s as coming off this long period of gold not moving because it was pegged, it couldn't, right? Gold was the definition of the dollar. Spring uncoils, huge ramp up, giant 50% correction, and then a ramp up to a blow off top. Well, the closer analogy is 2000, 2001, long period of gold not going anywhere, this time not pegged, but not moving. This huge ramp up into 2011. And guess what? From 1900 in 2011 down to close to 1,000, that's a 50% retracement, just like in 1970s. And now it sure looks parabolic. It sure looks like 1980. So I'm not making a bear case, dear audience. I'm not saying this is it. The top is in. Gold and silver are going down. I've just said the fundamentals support them going further up. But if you ask me, make the contrary case or steel man the opposite side, I think there are certainly plenty of reasons to be concerned that it has to keep going straight up from here. And just on general principles, anything that pulls a hockey stick, the higher up you go up that hockey stick, the higher the odds are of at least some kind of correction. So what am I saying? I am not saying the bull market is over. I'm saying that some kind of correction from, a screaming move up like this would be anything but surprising. But ultimately, if that happens, that would be, I think, a buying opportunity because of the beginning of the answer to the question. The fundamentals haven't changed. And there's every reason for gold and silver both to continue going higher.
Yes, so I love the balanced perspective, Lobo. But would you agree with the statement that gold mainly moved because the big players got involved? And if you look at the West, the mainstream, the retails are still not that involved with this bull market?
Well, that would actually be an argument for why it will go higher in the near term. Because I think that's actually starting to happen. Like we had the central banks, and that we've talked about it before. Everybody knows about the central bank gold buying. And that's not just a big buyer. I think the important thing to really remember about that is a one-way door. That doesn't go back to the way it was before. China and Russia certainly don't decide, oh, we're okay with trusting, the SWIFT system in New York and the United States government to have a kill switch on our financial lifeblood. I mean, I do think that was a paradigm shift, doesn't go back. And people say, well, how much gold can central banks buy? My answer is, well, how much money can they print? So I don't actually see a hard limit on that. So that's very bullish. It's not going away. But as you say, we've been waiting for normal people to get involved. There's been no retail participation, which is your usual sign of the mania phase, right? When the shoe shine boy and the bartender is talking about the gold stocks they just bought, that's when you know that things are getting really near the top. The fact that that hasn't happened yet suggests that as parabolic as it's gone, we're looking at an even steeper vertical climb as it goes into the mania stage. But be careful what you wish for, because if you go into that blow off top of the mania stage, well, that does signal the top. So if we get that, then we're likely looking at a much bigger, not correction, but maybe even a bear period after that blow off top. That's what follows a blow off top. So I'm not hoping for a blow off top right now. And by the way, I'm sure you'll ask me about silver. We could talk more about it in a bit. But one of the things that's, a tried and true, almost infallible aspect of monetary metals bull markets is that silver lags at first and then more than catches up in the end. And right now, silver is screaming up. It's catching up with gold. It hasn't yet, not on a real basis, and not even on a nominal basis. I mean, silver just barely hit its nominal all-time high, and gold is like what, depending on which peak you pick, but it's more than 4x. It's almost 5x its 1980 high. So silver still has a lot of catching up to do. And that's a good thing in my view. If silver was really catching up with gold, that would be another signal that this bull run is coming to its end. That's what happens at the end of a bull run in gold and silver. So I don't want to see silver catching up to gold. People hate how blown out the gold silver ratio is. If that puppy slaps shut, that's a signal of the end of this bull market. So no, I'd rather see both, with volatility, steadily march upwards from here. So the good news, I'm wandering off your question, Vladislav, sorry, but the good news on the silver question to the gold question is the proximal cause right now for silver is this squeeze in London. Like, this isn't the broader market, some fundamental, some new industrial use. I don't think it's the average retail person. If the shoe shine boy and the bartender isn't talking about, gold stocks, much less silver stocks. So I don't think we're there. I don't think we're at the end of the bull market. I think it's the squeeze in London that's got silver catching up for now. It'll be interesting the way the world is right now, and silver being a critical mineral now. It'll be interesting how long it takes for this squeeze to be sorted out and the market to normalize. And maybe it normalizes at a stable higher price. I hope so.
Yes.
But what I'm saying is, I don't see signs of the end stage of this market. I don't see that market mania, the end of the gold and silver bulls, that the signs from past bulls like that. I don't see the ending stage now. But if we did start seeing these things, then it would be time to, I think, worry. Either way, you don't want to leave all your risk on. Nobody goes broke taking profits. I'm not saying sell everything. Personally, as you know, Vladislav, I have my upside maximizer strategy. So instead of trying to time the market or think I'm smart enough to know when the top is in, right? I have these triggers, and I will get stopped out of my big wins, not losses, if the market rolls over.
Right. And Lobo, so I get these questions in the comments. So people ask me, well, how do you know that the retail is still not getting involved? So would that be looking at gold as a percentage of portfolio? So what would be some of the things that you would look at to determine if the masses are getting involved?
Well, I was there in 1970s. I was the shoe shine boy, right? I was accumulating, so I couldn't afford gold, but I was buying Morgan dollars, silver dollars and stuff, literally with my lawnmower money, babysitting money, stuff like that. And I wasn't the only one. It was my pals in high school. I was in ninth grade. And my pals in high school were doing the same thing. And by the way, dumpster diving back in the day you didn't find gold in dumpsters, but there's a lot of silver. I mean, industrial uses for silver is not new. One guy found an old radar that had like this slab of silver for some reason in the bottom of it, like almost a pound of silver. Everybody was jealous of his successful dumpster dive. But so this is kind of anecdotal stuff, but it's real. I mean, that was happening. I saw it, and it's nothing like that now. More hard data would be when we do start seeing portfolio reallocations. We've heard on Wall Street that gold is a crowded trade, which is interesting. And you think, oh, well, that's it. That's the retail. No, that's not that's institutional. And when you hear these people talking about, which is by itself striking, 2 years ago, people couldn't spell gold. Now it seems like every other, fund manager or whatever that they have on Bloomberg or whatnot, they all say, oh yeah, we're doing this with NVIDIA and that with the OpenAI, and we're hedging with some gold. Like that. And if they don't say, and we're hedging with some gold, the interviewer will say, oh, and what about gold? Oh yeah, we have some of that too. Right. So that's a huge change, but that's at the institutional level. It's not the little guy, mom and pop, yet that we can measure. But I do think that's starting to happen. As you know, Rick Rule has for many years been saying that the global allocation to gold historically over the decades has been 2%. And recently it's been 0.5%. And if that reverts to mean, right, that would quadruple the investment demand for gold. So when that number changes, I think that'll be a sign of not just the institutions, but also the retail getting back involved. And I think there is evidence that that's starting. So like if I'm right about the institutions in their shift, maybe that 0.5% is on its way to 1% now. To go again all the way to that 2%, that's when I think you start seeing mom and pop and everybody. Let's put it this way. In 2011, when gold was doing its last big vertical scream upwards, my sister, who's a mainstream banker, had clients asking her how to buy gold. So she asked me, the family gold bug, the gold expert, well, what do I tell them? How do they buy gold? So she hasn't asked me that yet. And so I'm not calling a 2011 top yet.
Yes, I'm actually in a very similar situation. My background is very non-investment, so most of my friends wouldn't really talk about investment in general, but I definitely hear them talking about the crypto sector, but still no gold. So I suppose that's
Right.
a good sign.
Hey, here's a litmus test for our audience, at least the gringos amongst us. Thanksgiving's coming up. How many Thanksgivings have you heard, your obnoxious brother-in-law or whatnot bragging about their crypto gains and how their Ripple or whatever has soared, right? How many people talk about gold or silver around the Thanksgiving table? Besides you don't count, dear gold bugs. It's the other guys. If they start talking about gold and silver this Thanksgiving, our whiskers should be twitching. That would be a sign that retail is starting to get in.
Yes, so we did touch on silver, Lobo, but is there anything else that you're looking at on the macro level? Any changes or anything?
I think silver is acting as a monetary metal on this year on big. There are moves where you have seen copper go down, oil go down, and gold and silver go up. We saw this actually just this last Friday. This happened when this latest bout of Trump shock sent gold and silver higher, copper and oil lower. It's exactly what you would expect from the kind of economic news with financial implications like we saw. So that's good. If you're bullish on gold, silver is still the word for money in many languages, so the bull case for silver is there. But don't forget, the industrial side is also very, very, very real. It seems like, every week almost there's some new industrial use for silver, which is great. This does not subtract from it as a monetary metal. It just adds a new source of demand. But when the economy does go into reverse or show signs of trouble, that headwind goes away. So that's a factor. I'm not, people call me Darth Silver and all this stuff, but I'm not bearish on silver. I'm just pointing out in gold bug terms, if I'm right about more Trump shock ahead and more pain in the economy, the gold silver ratio may well widen again.
And so I would love to move on to the mining stocks, Lobo. And I've asked this question recently. So if 2 years ago someone would have told you, Lobo, that gold would be at 4,000, would you have expected the equities to perform better than they have?
No and yes. The equities are performing now. I mean, the gold stocks, I mean, even the GDX, you don't have to be a genius stock picker. If you just bought the GDX this year, you'd be doing great. So the equities are doing their job. Um, but they weren't last year and year before. So, and if you had told me, so rephrasing your question, if back in the day, years ago, if you told me that gold could consolidate, race up to 2000 and stay there, not correct like in 2011, consolidate, and then start working its way upwards again, like visibly. I mean, now we're all talking about 4,000, but when gold was moving from 2,500 to 3,000, it just had that. The I'm not a chartist, but looking at the charts, the way they move, the smallness of the corrections, the size of the leaps, it just wanted to take out 3,000 is the vulgar way of putting that. And the stocks were not having any of it. The stocks were, okay, the best of the best were moving, but the rest were barely paying any attention to gold's run at all. Let alone the fact that anything above 2,000, when mines are built, assuming 1,300, 1,500, or an aggressive build back then would have been 1,700, right? So the stocks should have been performing better and they weren't. And in early 2024, I even wrote an article, are gold stocks broken? Is this a broken asset? And my answer was no. In the early aughts, gold went up and the gold companies blew it. They blew out their balance sheets, they spent more, they their negative free cash flow increased. This is another Rick Ruleism, right? It takes real talent for the underlying metal to go up sevenfold and for your free cash flow to become more negative than at the beginning of the bull market. And I actually charted that. It's true that happened. So the recency bias, or the most immediate memory of people who dared to buy gold stocks in the last gold bull, is that they underperformed. The producers underperformed. So it wasn't unreasonable for people to be worried about the gold stocks. Would they flub it again this time? But actually heads rolled, discipline prevailed, and the producers have been delivering much better this time. They've been delivering widening margins as they should. There's been much less indiscriminate buying of crappy assets just to put more gold ounces on the books, that sort of thing. And that's telling in the results now. And it's telling in the stocks now. So in 2024, I said, no, they're not broken. You'll see when the margin expansion happens that people will understand that they're doing things better this time, if not completely right, at least better this time. And all of that has come to pass. And so I'm pretty excited. The danger here is really about the stocks, is that the rising tide has started to lift all ships now. And that is dangerous because some of those ships have huge gaping holes in their hulls. They don't deserve to be raised. And as soon as things cool off a bit, the better stocks that are literally printing money, or companies that are printing money, digging money, real money out of the ground, they'll do fine. But the ones that, were lifted up with the hype and the frenzy, they will go back down again. So it is, I wouldn't go with the GDX or DXJ. I would still be a stock picker in this market because, come the correction, there's always some kind of correction, even if we go higher, right? Not all stocks will fare as well at that time.
Yes, and at the current commodity price level, if you look at high quality producers, do you still see opportunities there?
Well, the truth is, for the first time in my career as the independent speculator, I have yanked my shopping list. I'm not buying any stocks right now. The ones that are worth owning, the best of the best, they're all, if not all-time highs, multi-year highs, or at least 52-week highs, right? And yes, they could go higher, but disciplined speculators don't deliver over the years by buying high and hoping for a greater fool to come along and buy even higher. The formula is buy low, sell high. So I can't call something that's just gone like this a buy low opportunity. But what I can say is, if our previous, segment about, is is the mania in front of us. If we're going into that mania phase, if silver really does catch up to gold, that actually implies maybe gold going to 5,000 and silver going over 200. In other words, a lot more excitement in the near term ahead. If that happens, and if the retail investor is getting in, as we've been speculating that the retail investor is starting to get in, if we go into that mania phase, then actually the blue chips in this space will be the first ones to benefit. Doug Casey taught me to call these companies, they're not just the biggest of the majors. We call them the go-to stocks. Because when the generalist investor or the shoeshine boy who's first time heard about this, they go, oh, well, what's a gold company? I don't know. Then they go and they look. Well, what do they see? They see these big go-to names. Those are the ones that get the first dumb money that comes chasing in at the blow off top. So as ironic as it may seem, it's not your crappy little junior stock with the tiny market cap that could double on that phase. It's actually the bigger companies. And I've just said that I personally wouldn't buy anything that just hit an all-time high or a 52-week high even. But those big companies that are there are the ones most likely to bump up again if that blow off top happens. But would I buy now betting on that? No, because I don't want the blow off top to happen. B, I don't think it's going to happen. I don't think this bull market is over yet. So if we see a more steady, we see some consolidation, like gold consolidated over 3,000 for quite a while before going screaming up to 4, it'd be reasonable to think that it consolidates here again for a while before the next big move upward. And that would be better, actually, for us as disciplined speculators. That consolidation period would give us more buying opportunities. So right now, I'm not buying any gold and silver stocks. I've told my clients, I've yanked my shopping list. I'm not buying any right now. But I've also said, well, if you wanted to gamble, instead of going to Vegas, the next big move could actually be upwards. And the go-to stocks could actually be the ones to bet on.
Yes, and I see Lobo, my portfolio getting smaller and smaller. So these big companies are getting bigger. We can see companies like Silvercrest, Max Silver, they're being acquired. So I suppose as you mentioned, those big names are getting stronger as well. But that's likely to continue in the next few years as
Yes.
well.
M&A is a fine way for your portfolio to get smaller, because it's not, oh, I made a mistake, I got to sell. It's, I had a big win and here's my exit strategy, right? For the majors to provide your exit is really, it's one of the easiest ways out, because there's no question about the liquidity, especially if, well, either they pay in cash or they pay in shares. So if you wait for the close, then you don't have to worry about selling a large position and knocking the share price back. If you've got a smaller position and it's, the offers for cash or something, or you don't want to own shares in the larger company, you're not likely to, trash the share price if you sell. So those are happy endings. The other thing is, I mentioned earlier, the upside maximizer. When it's a strategy of, instead of, as Doug Casey taught me, selling half on the first double, instead of doing that, I put an upside maximizer on it, which lets it continue to ride. I don't sell anything. But when it rolls over into more than normal volatility, that's when I take profits. And what I want to say about this, in the connection to your question, Vladislav, is a lot of people say, oh, take profits, you're selling everything, but there's still plenty of upside in the company. Well, no, taking profits does not actually mean closing the position necessarily. It can. It can also mean literally leaving all the money that you left in, leaving all the money that you initially put in this play there and just taking the profits off the top. That way you have all the money that you started with, still in play, but no risk, because you've taken enough profits to more than pay yourself back. Or if you're nervous about it, you can do different things. The point is not that, an upside maximizer gets you out of the market. The point is that it gets you to what Rick Rule calls the point of no concern, right? You cannot get hurt, whatever happens next. So I just wanted to bring that up, because if people are saying, oh, Lobo's turning bearish, he's not. What I'm saying is nobody knows if the market, if gold, silver, and the industrial metals join in and all these commodities go to the moon, great. I'll still be long. But if things roll over, you don't want your gains. Gold bugs have been waiting years, if not decades, for gains like this. You don't want that slipping through your fingers. How painful would that be to finally be right and then not make any money being right? So don't let that happen to you, dear audience. That's all I'm saying. Again, I'm not turning bearish. I'm not saying to go out and sell everything. I'm not calling a market top. I'm saying nobody goes broke taking profits. And if you don't use my system, you should develop one of your own to make sure that you lock in your gains and you don't let them slip away.
Yes, 100%. I have been selling recently as well, which is painful for me to sell at the current because I'm still bullish in the long term, but discipline is unbelievably important. And Lobo, so I would love to touch on copper as well. So I spoke to Rick Rule a few days ago, and his view was that he is also nervous about the economy, which could be negative for copper, but he believes that there are some really good opportunities that he cannot resist to not get in right now. So what's your view on copper market at the current levels?
Well, we could just refer your audience to that. That's exactly the boat I'm in. I actually said that my highest conviction trade or my best bet for 2025, like last year, not prediction, but my expectation for this year was that copper would be the best. My top priority buy would be in copper space. But I was waiting for this economic shoe to drop. I didn't think the Trump shock would take this long to hit the real economy. So I've been building cash. I still believe that. And I'm building cash and I'm looking forward to going long copper. Occasionally, an opportunity has presented itself to me that I thought was too good to pass up. So I actually have added some copper this year, and it's done well. Just not as much as I thought I would. And I'm still looking to add a lot more. And yeah, the way I've put this is, I'm not just a private investor. I'm a newsletter writer, and I've got 40,000 best friends looking over my shoulder. So if I say, "Oh, I'm excited about copper. It's going to run for years, maybe decades. Blah blah blah, all the fundamentals. So buy copper stocks, and don't worry if it corrects. It'll be fine. Just buy it, stick it in a drawer, and in a few years you'll be happy." If I said that and people did that, and Dr. Copper did catch something from a sick economy, right? And let's say copper just goes down 25%. That's still a huge move. The copper stocks would crater. They'd go down 50%, 60%. And yeah, if you bought, one of the blue chips, their liquidity wouldn't be in question. The company wouldn't dry up and blow away. If you sat it out, you'd probably be made whole eventually and make money. But, if I did that, if I told everybody you go buy copper stocks and this sell-off happened, I would hear no end of screams of pain. So I'm not willing to do that. And also, it's not just that. It's not just that I'm worried about public opinion. It's actually, if I do that and people take losses and they panic and they sell, they realize those losses, they will have bought high and sold low. And I will have been instrumental in them losing money. And that matters to me a lot. I don't care if people get mad at me. It's not the screams of pain. It's the realization of losses that I don't want to encourage to happen. Plus, on the greed side of the scale, fear and greed, I want to buy low, right? I just talked about disciplined speculation not being relying on the greater fool theory, but buy low, sell high. So I think, I look at the economy, I look at the world, and everything I see tells me that there should be a buying opportunity, a better opportunity to buy low in the copper space before it goes higher. So that's what I'm planning to take advantage of. And if I'm wrong and there is no opportunity, I'm looking at a multi-year, if not multi-decade bull in copper anyway. So I'll just buy anyway. I won't buy as low as I had hoped to, but there'll still be plenty of money to be made riding this higher, because I think I probably don't need to add much more there, but just the structural supply constraints, unlike oil or even uranium, there's plenty of uranium out there and there are deposits that could be brought online more easily. With copper, the projects just aren't there. And the few that are, they're very, very few that are world-class and higher grade, not lower grade. That most of the pounds in the ground that are known out there, they're there because they're lower grade, right? So uh, the demand side for copper is extremely bullish. The supply side is extremely constrained, and permitting these giant mines is maybe except in the United States, but still very, very difficult. Like you can't snap your fingers and bring the supply online. So very, very bullish. So either I'm right and I get a chance to buy low and make more money, or I'm wrong. I'll still have a chance to buy relatively low and make money.
Thanks for that answer, Lobo. And let's finish by talking about uranium. So again, what's your macro view on the market, and do you think the equities are short-term overvalued?
No, I don't think the equities are overvalued as a class, but they are not cheap. So I have stopped buying uranium stocks as well. I've been hoping, and actually, we've had some corrections. Like uranium carved out a bottom earlier this year, and I did highlight that for readers. And I'm not a market timer, but it looked like it was happening, and that turned out to be a great buying opportunity. And since then, it's gone up and it's come back. It's gone up. It's come back. But in the retreats have been pretty sharp, and they produced like no selling. So I've been hoping. I'm long already. The overall thesis is sort of like copper, except that I think in time it'll be easier for high prices to cure high prices in the uranium space. It's not rare. There's a lot of uranium out there, and it's even a byproduct like the Olympic Dam and even gypsum mines. There's rare earths. There's a lot of byproduct uranium out there, and just so I don't think this is a bull that runs quite as long as the copper bull, but it would take years to sort out, and the demand is going through the roof, and the supply has already been more difficult. Like the low hanging fruit, the mothballed mines, even the two biggest and best uranium miners in the world have struggled to ramp up production as originally intended. Both of them have moved the goalposts. You know who they are, Fury Uranium Bull, right? And the smaller companies trying to bring mines online, all of them are either behind schedule or they've cut back their production goals for the ramp up period. Some of them haven't come to fruition at all, and not just because of military coups in Africa, right? So the idea that high prices would cure high prices now, I think, is demonstrably wrong. And that is hugely supportive for the uranium bull case now. My only problem is that I think it's so obvious that the stocks haven't really sold off despite the corrections. I'm hoping we'll get a bigger wiggle. Uranium is used for baseload power, so it's actually not that sensitive to the economy. In 3 of the last 4 recessions, uranium went sideways to up. But when there's some big economic scare, spot uranium tends to sell off, not the long-term contract price, but the spot price tends to sell off, and that can scare people out of the shares. So like when the DeepSeek thing came out of China, and suddenly everybody said, oh, we're not going to need more power. it was so stupid on so many levels. But it produced a knee-jerk reaction, and nuclear power is perceived as part of the AI play now. It's the AI hype has hit the nuclear sector. So that produced a smackdown in the uranium space, and a fantastic buying opportunity for anybody who had missed like even the blue chip Western uranium producer went from like multi-year highs to 52-week low on that DeepSeek news. And then within like 2 months, it went to all-time high back again. So if the market responds with such stupidity, such obvious stupidity, I see that as an absolute gift. That's Mr. Market walking up and just giving you a present, because if nothing else, the dead cat bounce would be profitable at a point like that. But in this case, it was just wrong. So what are the chances that we'll have another shot like that, another DeepSeek scare? Well, this is a world full of Trump shock. I think the chances are not bad. Who knows what might come out of the White House or out of Beijing or out of Russia, some scare. People still conflate nuclear weapons with nuclear energy for civilian purposes. So something on the war front could scare people out of uranium mining stocks, which would be, as stupid as the DeepSeek thing. So all I'm saying, long-winded way of saying, I still want to be a disciplined speculator. I still want to buy low and sell high. I don't want to buy high and hope to buy higher. And the uranium stocks, at least the better ones, have not presented themselves with a buy low opportunity to me since April. And I'm hoping there'll be another one. But I remain extremely bullish.
Yes, I would actually like to share this with audience level. So as part, when I analyze a company, I what I often do, I would do my own analysis, then I would use your service, Independent Speculator, to share my notes. And sometimes I have to fight very hard because you're very conservative, and you make me think a lot. So you look at the fundamentals, you have your pawn up or down. So yeah, I just wanted to say that it's a great service, and if you want real, sometimes harsh opinion, that's certainly a good place to.
If you want the rain on the parade. Well, thank you for saying that. But it's interesting. I have clients who tell me that they subscribe to me and two or three other services, and their whole method is, they don't have the due diligence boots I have, right? They don't have the team. They can't go out in the field the way I do. But if I like something, I give it a thumbs up or a claws up, as the case may be for a wolf like me. And X person and Y person also does. Well, then they feel like they're not being hyped into something. 3 independent experts have agreed, right? So that's their whole methodology. And the other thing is, if you don't mind me jumping on this, like I don't claim to be the person who gets all the 10 baggers, and I don't claim to be the person who has the biggest wins on the street. Actually, my whole method probably means I'm not going to be the person with the biggest wins because I am more cautious. What I can say, though, is that I actually win money on most of my speculations. I was taught when I came into this space, look, Lobo, this is speculation. You got to understand, you got to lose money to make money. You're going to lose money on more of your stock picks than you make money. But the 10 baggers and 20 baggers will more than make up for it. Like on average, you'll come out ahead. That's what I was taught. But my experience is that the audience, the readers, they can't stand that. They get shaken out. They do panic and sell low. So I actually try to win. Yeah, I know I can't win all the time, but I try, and I do win. We're having trouble updating our track record with our new website. We will fix it soon, but I actually make money on about 2/3 of my stock picks. So maybe fewer 10 baggers. If you want all 10 baggers, my service is not for you. But if you hate losing money and you want to make money in this space, maybe you should consider my take.
Yes. So Lobo, these are all the questions I had. Is there anything else that you would like to mention, or maybe we haven't covered?
I I don't want to join the hype bandwagon, but I do want to emphasize two things that we said. One being, like, if we are going into the mania phase, my caution right now will have an opportunity cost. If we're going into the mania phase, as crazy as things seem now, like I really do think that $4,000 gold could be the very thing that sends gold to 5,000, maybe even 10,000, and silver to triple digits and beyond. If we go into a bona fide mania phase, like what happened in 1980, 1979, 1980, was so many standard deviations above the norm. As crazy and as parabolic as the moves we have right now seem, we're not there yet. So if that happens, instead of being a cautious old speculator like me, just jumping on that bandwagon, that gamble, if you've got money you would spend at a slot machine in Vegas, maybe the slot machine of the stocks would be something worth considering. So I'd really want to emphasize that I'm not poo-pooing that, and I'm not saying the market is topped and it has to go down from here. So, I think that's real. There could be big money to be made. As Rick says, the easy money has been made, but now the big money could be made. But that's more of a gamble. That's gambling on what happens next instead of betting on the trend. So I just want to clarify that. I really, you know, my Darth nicknames and the rain on the parade metaphors and all that stuff, it is not my intention to be negative. It is my intention to provide you, give you the clearest, best thinking I possibly can. And that's why I come across as so cautious.
Lobo, thank you so much for your time. I have really enjoyed the conversation, and I hope to have you back on the show.
Thank you.